Hey guys, Boris Schlossberg from BK Forex. Welcome to our Forex Daily Technicals for 2/1/13. New highs everywhere. Market going absolutely nuts. Past performance is not a indicator of future results. Trading Forex carries high level of risk, may not be suitable for all investors. High degree of leverage can be working against you as well as for you. Before deciding to trade any such leverage products, you should carefully consider your investment objectives, level of experience, and risk appetite. Possibility exists you could sustain some of the loss or your initial investment, and you should not invest money you cannot afford to lose. You should be aware of all risks associated with trading on margin. Seek advice from an independent financial advisor if you have any doubts. Information contained here should not be used upon as as a substitute for independent research and should be performed before making investment decisions. BK Forex LLC is merely providing this information for your general information. Information and opinions presented do not take into account any particular individual investment objectives, financial situation, or needs. And all investors should obtain advice based upon their unique situation before making an investment decision. We're not responsible for any losses incurred in investments made here, and we do not render investment, legal, tax, or other professional advice. If investment such advice is needed, please seek advice of a competent professional. All right, I don't even know what to start with first, but let's just go through the yen because obviously yen just blowing out. Here's the yen 4-hour chart. Excuse me, I'm sorry. Yen just takes out barriers everywhere it goes. If we look at the chart here, obviously we're fresh. Year-to-date highs, 92 barrier went by the wayside in Asia, and we're doing the exact same thing as we sort of did with the 91 barrier, which is we break the 00, we consolidate around the 0 until we take out the 50 level, and then we just push on and go on further. So if you're looking at this kind of a structure here, we took out 90s, then passed around the 90-50, came back down, took out 91s, and then just did the same kind of a thing here yesterday. It's obviously grossly overbought, but a lot of the push high here is probably going to be contingent on whether the NFPs today perform or not. One thing I think that's kind of interesting is that everybody is positioned long in the sense that everybody expects the NFPs to be relatively good. Market is obviously long risk, and U.S. rates continue to tick up on the assumption that U.S. recovery continues to be in sight. So the danger, in my opinion, is to the downside. If we have bad number, there's quite a serious potential here for profit taking to occur. So you could, if we have a bad number, we could take it down to obviously 91, and perhaps unwind it all the way down to, take it down to obviously the 92s, and perhaps unwind it all the way down to 91. So I think that one of the interesting things here to watch is the surprise to the downside. We get a surprise to the downside, 91.50s will probably go, and if 91.50s go, there's a reasonable chance here we can go all the way down to 91 on a corrective basis. 91 is a pretty decent shelf of support here, so it's probably going to be where the battle is going to be fought between the bulls and the bears. But between here and here, there may be an opportunity here, maybe an opportunity to trade here if we get a surprise to the downside. Upside, obviously 92.50 is the target that everybody's gunning for, and beyond that, perhaps even 93. These trends really can be parabolic, so it's very hard to stand in front of them. I would only trade the downside if we had key levels broken. In this case, 91.50 broken to the downside as a potential unwind trade for the day. Euro, same story as yen, just a one-way power move. Look at this move. We're at 32s already. We just continue to be barreling through. I guess the 36.50s is the optionality barrier that everybody's trying to gun for right now. But it continues to do well. The Spanish data overnight was actually quite good. The thing with the euro also, obviously, grossly overbought, but I think you have to, let's go on the 3-year chart because it's the only place we can see. We cleared this 35 barrier, and frankly, there is very little on the charts that holds you back beyond 35. As you see, there's just there's a little bit of choppy around the 37, 38 area, but it's really not till the 40s that you have some sort of continuous resistance. So it's not a situation, though, I think, where you're going to get a move from 35 to 40 in a vertical fashion. You definitely will get some retraces back. I think 37 obviously should be a pause level. Again, same story with the euro in the sense that if you get a surprise to the downside, you may get a little bit of an unwind on the euro side. But the euro has just been a one-way train up. Very, very hard to short this thing on levels. You kind of want to see it come back off levels in order for you to get a move. There may be a time where it's going to get corrective all the way down. 35 obviously now becomes a new support as it was former resistance. So in this case, if you break back below 36, a test back down to 35 is probably where it's going to stall out and the support will occur. In the meantime, 36.50 certainly in sights here even before we hit the NFPs today as the day progresses. Contrary to both the euro and the yen, the Aussie and the pound are just sucking air. The pound, the Aussie has just gotten decimated on all sorts of reasons. One, data overnight from China was relatively weak. Data from Australia was relatively weak. So it's showing a lot of relative weakness on that level. But the primary thing that's driving Aussie down is actually the strength of the crosses. So if you look at the Euro Aussie, obviously fresh year-to-date highs, that's pushing all the way through 3100s, and it's just killing the Aussie to the downside. But the other cross that's surprising, I think it took a lot of people by surprise, was the Aussie Kiwi cross, which has really tumbled significantly after the RBNZ's Wheeler made a whole bunch of comments basically saying, hey, we're not going to cut our rates. We need to have relatively high rates given our external debt condition. And that essentially created a flow out of the Aussie into the Kiwi. And that obviously created a lot of downward traction on the Aussie. The thing about the Aussie, though, is we are coming up. Yesterday we had the double bottom. Double bottom's kind of been broken if you look at this situation. But the true shelf of support is this 103.50 level. So we are coming up to sort of lower levels. Now, 103.50 gets taken out. That's a very, very negative construct, and it basically shows that the Aussie then can unwind all the way down, possibly to 102.50. One possible idea of what could drive 103.50 lower is if again we have a negative shock out of the NFPs today that could push all risk to the downside, and that could take us out. So 103.50 given very, very negative. 103.50 holds, would possibly have a move all the way up to back up to 104, maybe even back up to 104.50. But today's price action kind of very negative. We basically have an engulfing bearish candle here that reverses this very weak jump yesterday, and we'll see if if we end on a day's lows, obviously it's going to look very, very bad. Cable also sort of running out of steam. Cable not nearly as bad as Aussie. Cable is just simply running into the resistance at around the 59 level. The resistance is both horizontal, where you have this was former support, right? Now new resistance, but also there's 200 period SMAs that are running into this thing in front of it. Today we have the UK PMI data. We'll see how that trades out. If that's positive, that could push us through 59. This is a very big thing. If we push ourselves through 59, we do have a chance to go a little bit higher, and that would create a very strong recovery. One of the things I think is unique about the cable structure is look at the V-shaped recovery. That's a pretty interesting recovery in the sense that it caught a lot of people who were short, flat-footed, and there's been absolutely no way to come back and get their trade back, given the fact that it's just been a very strong push higher. So I do think we get close to the 59s, they're going to want to push this thing right through and squeeze the shorts higher. So that's pretty much how it shapes up. A lot of interesting price action, obviously, and a huge amount of event risk in front of us. As I said, I think the balance of risk lies to the downside and to the upside because so much of it has already been factored in. But if we do get positive data, it's just going to be roll on over to further highs as the day proceeds. Boris Schlossberg for BK Forex, over and out.